All right, guys. So in these Tuesday sessions, as you know, I want to start by just you watch this in 6 months, and that might not be as relevant or relative, but it's important for guys listening now and you guys that are here live. The market's pricing in a sooner rather than later reopening. April 30th is technically the end of the 30 days to slow the spread and all that stuff. There's going to be, he gave a hint, President Trump, that it was going to be sooner rather than later. And anything before April 30th or pretty close to early May, I think is positive. And that's why we're pricing in on a day where we're up 2.5% in most of the stock indexes, 2+% going in. That could change pretty quickly, either after they announce a week. If you get resistance with governors from different, they're starting to create a regional relationship, state of Washington, Oregon, California governors say, well, we'll do all things together. So that friction, if there's any kind of resistance to reopening sooner rather than later, the stock market isn't going to like that. And you're going to see maybe some bearishness, knee-jerk reaction. So these are the things that are going to come at us in the next few days to few weeks. I still don't know what he has in mind. Just listening to the press conference yesterday, I could tell he had a date, and now they're putting this council announcing who's on this commission to help give advice as to when's a good time, really some guidelines. Here's what I think personally the market's going to want, and why, because this is what I would want. And I'm trying to project what I want into what people want, into what the market would want. If they're clear with guidelines as to what you can expect when things, quote, reopen, the markets will like that organization. Businesses know what they need to comply with, restaurants, movie theaters, and such. So there's an expectation of, if I go to a restaurant, this is what I could expect. If I own a restaurant, this is how I could reopen. And if they could calm people down through the reopening, the market will first anticipate, hey, this isn't bad. It's sooner rather than later. They're creating expectations. They have slogans like maybe temporary normal, because all in all, we can't fully see how much we lost, understand the carnage until you get back to some normalcy and fear. When fear is around, there's no normal. There's nothing that's normal about people, having 3 looks at someone who sneezes. Or it seems like when someone coughs, it's like someone yelled fire. It's not going to be normal if that's the case. So I think that there's some important things as traders you got to pay attention to as to what the market's pricing in, what actually happens, what could create bullishness to bearishness. And then we start to get some ideas. Like I've been saying, this is like a hurricane that once it clears, you could look and see what kind of damage it's done. And it's starting to clear. And, first they priced in, we're flattening to going down. If this is probably where we are in the U.S., do you get that continuation? The market won't sell off. And then do you get an economy that's reopening, and what kind of restrictions? The market could look at some of these guidelines or restrictions and say, why even reopen? I don't know. It doesn't know. We don't know. So we got to get some more information out. But based on what Kudlow said today and what the president said yesterday, it seems like they have this plan. They have a date. It's just a matter of announcing it. And the markets, hey, the smart money's the smart money because they got information, not because they went to Harvard. So maybe some insiders know that there is a plan. They like it. It's organized. It creates the least amount of the F word, not the word you're thinking of, but the fear. You gotta control fear as much as possible. You can't reopen, and every time someone sneezes, it's weird. You got to minimize that, I guess, and get to normal as quick as possible. All right, now, simple slide, simple image in today's content. We talked about icebergs last week, and I'm going to build on that with some simple, you guys have seen it in the room with the screen share that Davis put together with big buyers and sellers. Big buyers and sellers are shown with green and red boxes. It also has some numbers on the side. I'm going to explain those. But the usefulness of it is no different than a ton of videos that are done in the Edge program. Big lots, they're called, big orders. You could pull this stuff up on different footprint or number bars. And I'm not here to say, well, this is the only way to see it in the world. No, but it's a convenient way to see it. And I'll show it to you on the screen share many of you guys are used to looking at in a second. But the picture of punch a guy in the face means if he flinches and goes down, he was supposed to. If a sell order comes in and price goes down, it's supposed to. There's no information. If I punch him in the face and he doesn't flinch, seller comes in and the market does this, there's a clue there that above that sell order, it could pop. You've heard me say this hundreds of times if you've been with me a while. The clues are always when something happens that wasn't supposed to. Sell pulse, sell pulse, sell pulse, as Dave calls them, and we can't go down. We're probably going to go up, especially right above those sell orders. And the sell pulse, by the way, means the same as a sell, big sell order. Aggressive buyer or seller. Sell pulse, buy pulse, as Dave calls them. Same thing, same concept. Aggressive seller, aggressive buyer with a specific size attached to it, greater than or equal to. Punch a guy in the face and he doesn't flinch, you're going to run the other way. So does price. All right. And we could even take this one step forward and you see everybody run to the exits. And not just that seller. Don't think too deep into this. Meaning the guy who sold 230, is he the one that buys it back up? Who cares? I don't know. But what I do know is that selling couldn't get price to go down. There's probably people trapped. It's absorbed. They don't know that it's supposed to go down. That's why they get caught chasing. It's something I don't think I've explained it that way before. Meaning, the reason why it's a clue is they don't realize the sellers, the shorts rather, the 230 lot guy, or just the shorts in general who want price to go lower. No matter where you're short from, you want price to go lower. If selling comes in, they don't know they're going to say, uh-oh, and start puking and trying to buy it above a certain price. That's why it sets a probability. They don't know. They start doing it, and then they know. That's why it's called an edge or an advantage. They'll probably start to get and become aware of it as prices rally, and then they become part of the reason why it rallies. At that point, you're already long and able to ride the wave that they didn't see coming that we did. Because if everybody sees the wave, there's not an advantage. There's not the buyers crawling all over each other. So they don't see what we see and know what to do with it. And that's why it becomes an advantage. You punch a guy in the face, at least now I'm good enough to know he didn't flinch. I'm going to run the other way, not stay there and get my ass kicked. And Dr. Raj, I want to repeat that. I just seen what you just said. So I'm going to repeat that at the end. In fact, let me say it now. Let me interrupt what we're talking about here. So Dr. Raj says the concern is how the media is going to treat new cases that occur after we open, which will happen regardless when they reopen. And I think that's a good point. How does the media / markets, though? The media is one thing. How do the markets interpret the new cases and he brings up, they're going to happen. We're going to have new cases. Whereas we're going to do this. How much do we go up? You can't retest the highs. You can't even get close, but you're going to have an uptick. It just makes sense that when people start conversing, there's going to be more of a spread than right now. So that's a great point. What kind of panic or lack thereof? Because the worst case scenario, I think we all know this, but it's worth saying, is that they reopen and then they have to shut down again. All right. Thanks, Doc. So that's a good point. Now, going back to this element of punching a guy in the face. Hey, if I punch a guy in the face and you punch a guy in the face and he don't move, maybe we could retreat. There's nothing wrong with managed retreat. And I think I was watching a podcast, and no, was it a podcast? I think it was that I can't remember his name, but now I can't even remember the slogan that he had said. But it was a managed retreat, and that's kind of how we attack this virus is, we're all running and running, and all of a sudden we see something and we all have to retreat, but we have to regroup and go back at it. And that's what this shutdown is. So there's nothing wrong with punching the guy in the face. If you know he doesn't flinch, get the hell out of there. Don't stand there and get your ass kicked. You know what should happen when you punch a guy in the face. You want him to go down, obviously. So when sellers come in and price goes down, it should. But when price doesn't go down and it gets above where a lot of selling comes in, it's just the way to read order flow in a convenient, easier, practical way to create probability in your trading. So when you want to use order flow to qualify your opinions, this is how you're doing it. We had the iceberg and we got this. And we're just going to layer this stuff all together. And then, people have asked me how this is going to be rolled out. For now, you see it shared in the room every day. And then there's going to be something else that you guys could have access to for the entire day and your own screen share. It ain't going to be free because, number one, nothing is. And this is probably the best thing out there, pulling these things together, especially when we get into the Puke tool, which there's nothing out there like it. But let's not talk about that now. For now, you guys could see it on my screen share. And there'll be opportunity, if you're a trading room guy, to have access to it for a monthly fee. But you could have it all day. And you could put it on a different monitor. You could put it on wherever you want, blow it up. I don't want to get into that for now. I want to show you because you got to know how to use it. And the remarkable feedback I got, that how it's helping people and everything else like that. And then some of the game footage that Dave calls it that we look at is a great way to review. But that aside, let's get into looking at it again and just talk about the red and green boxes. Dave, are you here? Let me open up Dave's mic.
I am.
All right. Let me go through. You see my screen, David?
I do.
I'm going to blow it up. And so this is like, if you guys up, and I'll talk more about this in the next week, and you'll see where you'll be able to do this. So I'll get into that more when it's available. But let's say you're able to get into this screen share room. You're able to blow it up this big if you want. You could take it, put it on a different monitor, different screen. You got that functionality, plus to see it all day. Today, we're just talking about these green and red boxes. So to maybe, Dave, could you blow up that bottom chart, even make it bigger?
I can. What it's going to do is it'll just get taller. It won't help you much.
All right, don't worry about it. We'll just go through let's go through this box right in here. Could you explain these numbers on the top left corner of it?
So the top number is the last 3 digits of the order number. That's the order number
So that's
from the
irrelevant
CME.
for other people.
Well, mostly. We can get to that in a bit. And then the number below is how many contracts traded. So this one was 100. You come down here, there's one that did 115 bought, there's 100 bought. So that's what it's telling you is how big that is. But where it is relevant sometimes is you get a big buy pulse that'll go down and then turn into a resting order. So you'll see this and a big gray bar, and they'll have the same number on them. But that's the only place that I'm looking at those.
Got it. So this is first of all, if it's green, it's an aggressive buyer, which means they lift the offer, and the size they do it with is in the top left corner inside the box. So far, so good.
Correct.
And the length of the box, the height of the box, is showing you how many ticks or prices it took to fill that order. Correct?
That's correct. So let me just show you. So it'll go. So this one traded. This box I'm looking at here traded 28 up to 28.75. So you notice there's a line through the price. It didn't actually trade that. It traded this one. Does that make sense?
Which one again? The one right above the green box, bottom
Correct.
of the green box. Got it.
Yeah, it's got to be fully contained in the box, and those are the prices that it traded.
So it was 1, 2, 3.
4 ticks. It went 28 up to 3/4. So that's 4 different levels it traded through.
And what size was this? I can't see it.
It's kind of blocked off there. I can't see it either. It looks like maybe 177.
Looks like another one in there. All right. So if it's green, easy enough, aggressive, and everybody should know what aggressive buyers are. They lift the offer. It's a buy market order. If I put in an order to buy 2 at the market, I wouldn't show up here. But if I do it for 200, I would. Right now, if I loaded for 200 and clicked and bought them aggressively, which is a buy market order, I'd show up as a green box, say 200. And so what do you have this set for? Greater than 100?
100.
So greater than or equal to 100 is what it's filtered for. So these are 100 lot orders. And again, green aggressive buyer, therefore red aggressive seller, someone who puts in a sell market order. And they do it with a size of 100 or greater. And then the size is inside the box, upper left, upper left, upper left. And it then goes back into, well, how do we use it? And I'm not going to explain everything on this screen. And we're going to leave this stuff for last, not last today, but next week and the week after. We talked about icebergs, but these are big buyers, big sellers aggressively. And when they come in, does the guy fall down or not? There's no coincidence that they came in over here at the bottom left, price rallies, price rallies, price rallies. There's no coincidence that the middle, and this isn't a new concept. We talked about this for as long as you've been in the Edge program. When big orders come in and actually get the market to go up, somewhere in the middle, there's no coincidence, acts as rotational support. He comes in, they buy it, it can't go up or can't go up, can't go up. It doesn't go down, but it doesn't go up for the longest time. And it does then right in here. So at some point, as you're coming along the right side, meaning after the big buying comes in, you could predict it's probably going to go down before it goes up. And it's just a probability to pull out the randomness, to remove the guess work or feeling like a guess if you're right or wrong. Same thing in here. Big buying comes in, can't go up, right below them, goes down and goes down pretty fast. No surprise. Big seller, I started saying it's like the guy gets dunked on. Now, I don't know, and you don't know, but what we can do is ask the question sooner rather than later. Hey, a lot of selling, it didn't go down. And you get better and quicker at being on the team for this prediction that it's going to pop than having to wait. Again, there's other third-party software that has this. And to me, it's a lot of noise, too much noise. I'll explain that in a second, Stephen. But the boxes not only tell you how many prices it took to fill the order, but what was the order. And then obviously red for sellers, green for buyers. Keep it simple. Now, because we're on it, and here's the other thing. No matter how simplistic I just made it sound, this is not simplistic for most of the rest of the traders. And I wouldn't have known this 5 or 6 years ago. I probably wouldn't even have slowed down and explained this again, even though it's in videos in the course. But I come to the realization, and this is probably the most important thing you'll hear me say today, is that almost everyone that tries to trade not only doesn't get around to this, but just doesn't get around to, even if they see it, know how to apply it. And then if they have a piece of software that applies it for them, they don't use it. They don't see it. They don't recognize it. They don't ask the questions. The advantage is always in the simple. And trust me when I tell you, this is not simple to most of the rest of market participants. And this is way beyond, and I never would have said this years ago, but way beyond people who risk money. No. Same thing in here. No coincidence. We get above this box. Seller, punch him in the face, starts to rally. No coincidence. And I think we got a series of sellers that we really could push and get some excitement up to this gray area. Since I'm on this, let me just say what the gray is, and let me have Dave confirm it. The gray is a resting offer that's actually being shown. If you watch last week's video, it's a big order, but not all of it's shown. That's why it's called an iceberg, right? The tip of the iceberg is being showed. There's a lot more underneath it. This order is actually shown in the book. Until it gets cut off, that means it's pulled. So let's go back and see what it's showing us. And all the important information is here. Dave, you want to walk us through those 3 sets of numbers?
You bet. So that's got the top row is order number again, and then the dash is how many times it's changed. So he was offering 222, and he was still offering 222 when he pulled it. So he never changed.
The middle number is how many he got filled, correct?
Correct. The middle number is filled.
So 222 he started offering. 0 would be how many fills he got. If he got one of them, it would say 1. If he got filled on 1. And then this last number is after, well, either
That's
after
how many he pulled it. He was still offering 222 when he pulled it.
Got it. So this last number is how many he was offering either when he got filled or pulled it, correct?
So if it's running, so if the offer's still live, it'll show you the last number is how many are still in the book. So if it gets up there and starts trading and it starts out at 222, and then you'll see it start to move. All right, so he's filled 10 and he's offering 172 still. And so you'll see that go through, and it doesn't update for every fill. It's every 50 or 100 contracts, I think it is, that it updates.
All right, so let me say it again. So 222, and let's say he filled all of it, 222. What would this last number then say?
So it would say, if he filled it all, it would be 222 slant 222 slant 0. So
That's
that would
what's
mean
left. Got it.
he started offering, he filled 222, and he's done.
And he's done. And so when it says 222 is what it was when he pulled it.
Yep.
And that's by the line being cut off. He pulled it, correct?
Yep, you pulled it.
So he never got filled. He just showed it. Probably pushed the market down, then pulled it. Didn't even react to the upside. And then if it's a gray bar below or a gray line below, then it's a resting bid, correct? There's no
right, and it'll be positive numbers instead of negatives.
Got it. So it's different than an iceberg. And then I think we could change this. Right now it shows yellow. We can make it a iceberg green. Can't we, or no? Just like we made these green boxes?
Let's see. I think we can do that. Hold on a sec. So for you guys that don't know, I'm colorblind, so I have some.
That's all right, Dave.
So I have some kind of different colors that.
No wonder why you go through red lights.
Exactly. That's my excuse. It doesn't work well, but it's my excuse.
That's yeah. I don't think I know too many colorblind people. Just on screens, it doesn't affect traffic lights, you said?
Well, I can tell the difference in traffic lights. I can tell differences in colors,
I got it.
but like that yellow to green thing, it doesn't, didn't really make that much difference here. You like that better? So I just hit apply and I see no difference in that color on the screen.
Yeah, it's different. It's green now. I like it better. But it just more fits in the green buyers, red sellers. So
And let me do it on the screen above as well while we're
others
doing it.
are also saying they're colorblind. So you're not alone. I'm right and wrong blind when it comes to arguments with my wife. I'm not colorblind. I'm right and wrong blind.
See, if you just go straight to your wrong, you could
Yeah.
save a lot. You just save a lot of time and hassle and just go straight to your wrong.
I usually hold on to the shovel and then I get hit with it.
Yeah, you keep holding onto that shovel and keep digging and digging.
All right. So the iceberg we talked about yesterday or last week would be different than a gray line because it's not showing the entire order. It is hiding it. And let's go over those numbers here at the bottom, if you will, Dave.
You bet. So it's the same deal on the top row, order number dash the number of changes. And he's actually out. He's done 297. He did 233 of those at this price level, and he started out showing 20 and he finished showing 20. So that's all it was in the book showing. Visible was 20.
And
He
he's done
finished at
because
297.
the line's cut, number one. And he didn't get filled on the whole thing because it was 297 and only got 233.
No, he got 297. You have no idea what he was offering, but he did 297, and this little star at the end. Well, there's two things to tell. It's got the little star at the end, which means he's done, and then it's also got the line stopped.
So we know what he's showing. We don't know how many he actually wants until he's done.
Right.
Got it. That's what's important to go through. It's not just the what did he start off showing? 20 lots at a time. And then that gets filled and there's another 20 there, another 20 there, another 20 there. And that's what this number's keeping track of, right? Wait, let me erase that.
Yeah, the first number is keeping track of how many in total that order has executed. So
Got
it's
it.
the total number traded.
And the second number, 233, would show us what?
The number traded at that price level.
Ah, I see.
So somewhere else he got another 64. Where that is, we'd have to go look, or
No, that's all right. That's interesting. But we don't actually see that. Usually they trade at the same price generally. That's what I recognize.
Except when they start chasing, and then that's when it gets fascinating to me. When they start chasing down with an iceberg, that's a pretty interesting opportunity too.
Yeah, no, you're right. If he did the whole thing at one price, would you have two numbers here or just one? Like 297, 233 would just be one number?
No, it'd still be two. If it's all at one price, it'd be 297, 297, 20, 20.
So 297, all at the same price. He was showing 20, and the other 20 is he's done.
Yeah, and he was showing 20 the whole time. So it's the what did he start out showing? What did he finish showing? Or what's he showing right now? Yes. And in this case, since he's finished, it's what did he finish showing?
Sometimes does that change these last two numbers where he starts out showing 10 at a time and then was 20 at a time?
Sometimes it does. It's kind of not. It doesn't often. It doesn't change often, but occasionally it does. I'm not sure that really means anything. I put it up there because I wanted to see if there was information there. I'm not sure that there's a lot of information between if those things change, but I had the information. I thought I'll post it and see if I see anything there. You never know what you're going to find. You start watching it, right?
No, that's it. And it's all relevant information because it has to do with people who are playing. It's not like there's so much noise out there where this is actual orders, actual people playing the game. And so the beauty part of this entire opportunity to show is that there's, I know people would be like, I like to have this on my PC. But at this point, you don't. All you want is to be able to see it. You're not chewing up your computer resources, keeping it in one spot. And I'll talk about that later in the coming weeks. But you want to know what everything is. We talked about icebergs and the way to use them last week. Talk a little bit about what these numbers mean. Obviously, the red and green boxes, what they mean. where they come out. These I don't want to touch this week. We'll start getting into them next week. But the other cool thing is this top chart is a kind of just bars for PNF, and these are number bars. So it's like you get to see more of what went on the top side, and you take a telescope or a pair of binoculars and look into it. And then, you'll see the green and red boxes up here show up down in here. You're just seeing the information spread. So maybe you could follow the rotations a little different or a little bit better. But this is a 4 PNF up top also, right, Dave?
Correct.
Just bars instead of numbers, so it scrunches them in. You could see more of swing highs and swing lows.
Yeah, look at where we are. So if you look at the bottom, it is, let's see if I can mark. So essentially the bottom starts right, let's see, right there. So this vertical line, that's where the bottom box, that's where the bottom chart starts. So that's how much you're seeing on the bottom.
Wait, do that again.
So the bottom chart starts right, I think it's right there. Should be, no, actually it's probably right there. There it is.
So you're seeing all of this down in here is all of that.
It's just that.
Got it.
So that's your microscope. Get the microscope out, see what the little bugs are doing.
See what the virus is doing.
Exactly.
Well, you get a better sense of above and beyond, or above and beyond, above or below reds and greens on this lower chart because you zoom in on it. But you can get better subsequent support resistance, or a lot of buyers or sellers come in, like you mentioned today, by looking at this top chart.
Yeah, the top chart, you got to see the trade there first. And that's what my real sequence is. You got to see the trade developing, the level developing in the top chart, and start to see. And then when that happens, then you can start to glance down at the bottom and start looking at the detail and see when the guys start getting stuck one way or the other.
I'll go through your guys' questions in a second. But right at what time was that, Bruce? The VWAP. Dave, could you scroll back to 11 Central on the bottom?
Sure. I just let me roll up here a little bit. See, this guy's chasing it up. This is a resting bid. I'm not sure what Bruce wanted to look at, but this is a resting bid. He starts out at 12.75. He winds up jumping up here to 16.75. He was trying to get 202. He actually filled 109 and then pulled the rest.
Could you go up to this chart here real quick? Hold on, let me draw this chart and pull the price. I want to see these bars at the bottom. There we go. Perfect. Because he was talking about at 11, it went into a VWAP, and he was looking for a way to qualify the VWAP.
Let me scroll down to the VWAP. If that's what we're looking for, that would be right down in.
It's right below. Well,
there, it's this. It starts in this as it punched into the zone, and there may have been some stuff over here. We'd have to actually. I don't have video of 11. I stop at 10:30. There might have been some stuff in the guy's puking, but your qualification really is in this sequence where it drops into the zone, shoots out, quick retrace, and then bang. So that wasn't an easy one. But look what you got here. You got this structure back here that you're working against.
Yeah, well, here, in order to buy something down in here, based on what we're using, you didn't see anything unless you had shorts puke over here, which very well could have been the
very well could have been the case, yes.
Yeah. So that's, again, the ready, the fire and the ready, aim, fire. What did you use to qualify that, though, Bruce? Because that's what you had said at the beginning of today's meeting. All right, as he's answering that, I'll go to some questions. All right, good question. What happens if there are two or more big orders happening at the same price?
They go on top of each other and you only see one of them.
All right, but you'll see the size, obviously.
You'll see the size for whichever one is the last one to get plotted, it'll show the size of that one. That does happen, by the way. You see that in big buy and sell pulses. You'll see them overlap, and oftentimes you'll see several overlap. When you get a big fight going, you'll see several overlap, and you'll have green on top and bottom and red in the middle, and yeah, they just overlap each other.
Mike, maybe we'll talk about that in the coming days. Is the iceberg line show, is there anything proportional with the thickness of it?
No, the color will change though. It'll get more green or more red if the size is larger, but the thickness does not change. It's thick enough so that if there's an iceberg with a resting order on top of it, you'll see them both. Mm-hmm. So the iceberg's wider than the resting order, so that they're both visible. And that happens sometimes too.
And when an iceberg is finished, it's just like when an order that's being shown is finished, the line will end.
Right, it just stops.
If it's continuous to where a price is, then he's active. He's still there.
Mm-hmm, that's right.
Now, other people could see orders that are being that are in the book. If you have a heat map, or you see big orders up and down the book, but you're not going to be able to see icebergs because they're only showing 5 or only showing 20. But go ahead.
There's some other tools that'll show you icebergs, but my deal in putting this together was, and I started this a little over 2 years ago, and so it's evolved through a lot of work, but is to be able to see it all in one place instead of going back and forth between, because I bought it, Jigsaw. I have Jigsaw, I used that for a while, and I tried Bookmap, and I didn't use that very long, but I know a bunch of guys do. But I wanted to put all the stuff in one place. So you can look at one set of you got eyes on one spot and you see all the things that are relevant. There is one, let's see, there was a trade this morning that I want to show that I think is particularly interesting to show where all this stuff comes together. And it was a short. And let me see if I can find it here. That might be it. Nope. It was a short where it got a scale out of it, and then a bunch of stuff happened in all at once and said, oh, time to get out right now. Nope, still not it. There it is. So look at this. So you got all these buyers came in, right? Mm-hmm. Up against the zone, bang, 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 bang. So I shorted it right somewhere up in here, and I had a scale right. I wanted to be above the bottom of this, so I had a scale here. So it sell pulsed into it, gave me a scale. Then you had this big big seller of 374. He sold them all, and it came right back in his face. So you got a big seller, the big resting order. And now that I look at it, that is actually the same guy. So you look at the order number, it's 128 and 128. So there's this big sell order that came down and then turned resting. So he did 1,000. And so this came in and popped immediately back out. And so I got the scale on the push down, and it came back to here, and I just flattened straight away. And you can see what happened after that. So this happened. So I flattened and wound up making a little bit on the last 2/3, and then we're off to the races from there.
Yeah, you would have ended up scratching it or taking a small loser had you chased it and not being able to read, hey, this guy pushed it lower and he's done, and it's that beach ball underwater.
Yep. He did all that, and so I think I was somewhere right around in here probably. I mean, I didn't make a lot on the last two, but so what?
Hey, you move on to the next girl.
Right.
That's all it is. Was this 18? What price?
Yep. This is all the pieces. Well, there's no iceberg in there, but it's all the pieces except for an iceberg.
And the shorts puking. Or was there
In the
some of
short,
that? I think there was some of that.
yeah, there were some serious longs puking at the bottom of this too.
Longs would have been puking. You're right.
Yep.
Longs would have been puking because the market's moving down. So longs say uncle. And then what happens? It's happened to all of us, sometimes more than it should. But just think to yourself, how many times you're long, you get stopped out, and then it rallies. And you almost necessarily get stopped out on the low tick, but the bottom tick, near the low tick, and then it jumps. So instead of being on that side of it, you're going to jump to being on the predictable side of it. Getting out of a short like Dave did sooner rather than later, or maybe executing and qualifying a long if you thought that the market could, if you wanted to play the market from the long side, all right, you're apprehensive doing it in here because you're not rallying. You're not rallying. Look at all these buyers. Look at all these buyers. You're able to be a little bit more patient. See it come down. You're not going to buy the bottom tick, but you could be getting long and getting in and qualifying it as a buyer to get long. So you get more of an immediate, some more immediate satisfaction. And this is a big rally from 15.5 to 19.5. It's a 4-point rally with no heat. The key to trading is to have as many trades as you can that go your way ASAP. So then you could work back on making your decisions on how much you should take on a scale. At least now you're making the decisions from being positive. And the definition of a good location is to have it go your way or take a minimal amount of heat. Then you work on how much you could expect. That'll be dictated on how good your opinion is and everything else. The worst thing is when you're always trading and you buy it and the market goes right against you, or you buy it and it just does this and then goes against you. You have no chance. Now, not every trade are you trying to make it so when you get long, it goes up, but more of them, more of them, more of them. Now, I don't scale into trades. So, Stephen, let me just go back over what Dave said. Dave, you can correct me if I'm wrong, but he was short qualifying this gray area with all this green buying that wasn't able to get it to go up. So he's short somewhere in here. He scales out right at or above these green boxes from here. So he's
Yeah, let me
scaled out
scroll
of
back a little bit so you can see it. But yeah, just above. Right. Yeah, right where you are, right there.
on one scale. And he decided to do the other scales when he's seen that this was a big sell order that got them all and it jumped out of the hole. And he also seen, you don't see it now, but he also seen longs puke over here, which creates less longs, less sellers. So he forced him his other two scales based on that.
Yeah, so I hit the flatten button, which means get me out right now, whatever price.
Now, if you're looking to get long for whatever reason, he was covering a short, so he's a buyer. If you're looking to get long, you're a buyer. You could use this as a way. And when someone asks me where, it's never at the bottom tick. Anybody that tells you that doesn't know what they're talking about. It's after you see, like Dave, he had said he scaled out and got him in here. When you see that the selling might be done and you're anticipating that the bounce, you're close to where the bounce started. The closer you are to where the bounce started, the most likely your location is better. And then how soon does it go your way is a huge definition of whether or not you're in a good location. How close to the bottom did you get it, and does it keep going your way after you get it? And I don't want to get into too much of exactly where to get in and out because it's not necessarily an entire feel or art, but it's not a science either. It's all being able to see this stuff and execute because you know what the deer looks like. And that's a great point. Game day footage, as Mike brought up, reviewing these instances will help you read them as they're happening. And Dave has been doing, how long have you been doing the recording and then going looking at the game footage, Dave?
I've been doing that for a long time, but I combine them so I can only record one screen. So it's not been very long that I combined them in this view where you had the short and the long P&Fs. And so I have seen huge improvements since I did this presentation and started reviewing these two things together. Because where I was before, I would be looking at the number bars maybe, and then I didn't have the picture of the longer term. I didn't have the whole picture. With this, I see all the stuff, and it's made great strides in a short period.
Simplicity.
The problem that I was trying to solve is I've had consistency problem, and I think everybody probably fights it at some point, where I'd have genius days and just like, I couldn't trade my way out of a paper bag days, and so you try to fix that, and this has made huge strides in consistency.
And sometimes when guys are agreeing with you, because it's a similar pain point for a lot of people, and you go from trading like a superstar to not trading yourself out, and you're like, what changed? You know what I mean? That's the thing, is what changed. And when you figure out what changed, then you could eliminate or minimize the not being able to trade out of paper bag days. And then that snowballs, as Michael puts it. You start questioning yourself, and then you miss the next trade, which is a winner, and that's just a huge negative snowball that will make one bad day turn into 3 non-trading days. And if those days were traded the same as your bad day, you would have had money, and round you go. This creates the ability to have more consistency because you're watching the right stuff at the right time, but also the ability to review allows you to see, wait a second, I took 5 trades today and there were 10 of them. I happen to take, maybe if you had a bad day, you took 5 that were 4 of those were losers. Had you not missed the other 5, or maybe 3 of the other 5, those were the winners. So what's important is, are you missing trades you don't even realize you're missing? It's okay to miss a trade, but you got to know you missed it. Or else you start second guessing yourself and second guessing your setup and second guessing your idea. And your idea was fine. Your idea is innocent. Your idea is great. You missed some things. So missing less is always the objective here. That's how you slow things down. So Bruce says simplicity is key in slowing things down, especially when taking some heat for him. So in order to be great at something, it has to be slowed down by you, by us, by a pitcher on the mound, by a hockey player on the ice. If everything is going as fast to him as it is to us as the fan, then he ain't going to be on the ice long, because he ain't going to be as good. He ain't going to be able to perform. And this is has been a big help, because we've been sharing it for about 3 weeks now. So people are using it and understanding it more and more. These are the first 2 weeks that I started rolling out exactly what everything means, and then tying it all together. The last few sessions we'll do on this, and we'll have something rolled out and a little more explanation before all the sessions are done. But what his gray zones are made up of, as much as he's willing to share with those gray zones, but then also we'll do that at another session. Also, what the flags or the profile markings on the right side of the chart mean, because those are really important. And that's something that no one, putting all this stuff together is what's unique, but the stuff on the right side is unique, and nobody is a third-party software that shows that stuff. Any other questions? Hey, Dave, could you go to real time on both charts?
Sure.
Now, we had an iceberg that came in right here on the dead low, and then you see it here under the microscope.
And look what else happened. So you had some longs puke, and it was longs puke on the right side. So the right side is a more powerful indication than the left side. So that would have been a nice trade to get into.
I'm noticing late last week and then this week, we said this in the room, a lot of icebergs are getting filled, and then they'll either run away from it or go through it. And it's an inflection point for sure. This is odd to see price move lower and the iceberg come in.
Yeah, let me scroll up a little bit. It looks like he's damn near the dead low. Yeah, he's a tick off the dead low, and he did 499.
So let me walk through this. 499. He was showing 20. And this 200 number means
he may have moved something.
moved.
Yeah. Worry about the 499 is the important number.
Okay. He might have got some at a tick lower or higher, but close.
But he's on the dead low. I mean, he's a tick off the dead low. And it came right back in his face.
Odd to see that. Now, we don't know it's a dead low, but we do know is that it's stretched down, not up. And then they get through them. You have to start thinking upside's the right side, not because it was, but because the selling is done.
And actually, this is a pretty interesting. I really like these consolidations where you get the little head fake. So if you look at it in the bigger context, you got the big consolidation, and right in the middle here is a great place to lose a ton of money, get a shrimp in your hat. But then you get this little dip down, little head fake down, and back up, and that actually worked a couple of times until it finally did what it's doing now, which is getting out of the zone or the range to the upside. I like those. I used to be the guy selling this right here. Now I'm the guy buying this right here. And I will tell you, selling this right here, it's not a good way to make money.
Go over again what you just said about the shrimp in your hat.
So you got this consolidation, and these guys are just fighting back and forth, and you get this stuff going on, and the last place you want to be is trading in the middle here. But I like head fakes a lot. And so, but before I started learning, before I went to school, showed up in the room here, you would think, oh, good, here's the breakdown. I got it. So I'd be selling this low, and then what happens? Going right back in your face. So I'd be doing exactly the wrong thing. So now I'm the guy buying from my former self. I'm buying this when it makes this little head fake down against all this buy volume that was here, and it just head fakes down, and then there you go.
So right now what you're getting is a lot of shorts that are getting squeezed out. Could you take a shot and get short? Yeah.
Not here. I wouldn't.
Yeah, but I'm just saying, if it doesn't, here's what's nice about this. When it doesn't work, it gives you time to get the hell out. It's like a timing thing. When the quarterback snapped the ball, your internal clock could start rolling. And that means if it doesn't go, and it should, get the hell out. You're not going to lose. Generally, you don't lose much if you're wrong because it's hanging around this price. And who cares if it, goes back down after you get out? Your timing becomes better. There's always people are asking, well, when do I know to get out? That's, you got to know why you got in and if it should be doing something in a timely manner. Some weeks you could be more patient based on tempo and volatility. But when you get a bunch of shorts that just puked, and we haven't talked a lot about this tool yet, that's going to be in the coming weeks. But when you get shorts to puke and there is less buyers, the only way to realize that and to get the market to go down easier is to start going down. It's like pushing a boulder. You got to get it over that one little hump, and then gravity could take over and it goes down the hill easier. But you got to get it to turn a little bit first. And if it doesn't, maybe it doesn't go down. But generally, when it rallies, shorts puke, you get short and it's wrong, you don't get killed. Unless you're stubborn and never want to take losers your whole life.
And so I immediately said I wouldn't want to go short here, as I didn't see any buy pulses getting stuck up at the top of that. Now it's working, but that's why I immediately said no. I didn't see buyers getting stuck up the pushing, trying to push it higher.
And there's nothing wrong with that, because as long as you're consistent as to, why you would get long, why you would get short, you're waiting for your qualifier. So there's nothing wrong with it. Plus, you could see it already tested this area once. It's rotated here a couple times. So there was a little bit more risk in here. And to be honest, had I taken a short in here, I probably would have taken a small winner, small loser, or scratch, because it took too long. But again, you're on the right side if you're looking to fade it. And then you'll get better. Everybody will get better if you're giving yourself a chance. And that's what good locations and decent locations do, is it gives you a chance to say, you know what? I'm going to keep this. You could be one of the persons that be like, when I see this and I also, have X, Y, and I get Z, I'm going to keep it. No, I'm going to take a 6 ticks of heat no matter what, because it just seems like it works way more often than it doesn't. And I'm going to let it work itself out. And you could do that.
There's a 300 seller right there. You got some longs, Puke, you got a 300 seller into it, but he's getting it to go.
Yeah, I mean, listen, you got to know where you're at. Did it just rally 4 ticks and then you bought it? No problem. But then that's that area you're playing. So it comes back down. Longs, Puke, get a little bit above this seller again. It should go. But where do you want to get long, and where did you get long? And are you just doing it based on, I'm going to fade every move lower? That's not always the smartest thing to do, because you don't have a good ready for that. And I don't want to turn today into going over everyone's ready and aim and fire. Your fire is better, everything else gets better. Once you get, generally you get back to back, at some point you'll always get the market to find a bottom or find a top, but you can't keep buying it until it does. Now, if it's gonna, it shouldn't go through 24. There's two, well, here, and here, longs puking. If you're long from 24 quarter, it should keep going up, or you got to get the hell out. Why? Because it should, right? Because it should have went sooner rather than later, and you don't want to be on the railroad tracks for long waiting for the train to stop.
Yeah, and that long bar is usually not your friend for a quick reversal,
No, right? So
especially at this pace.
you're running out of time. Get the hell out, so you don't have to take another 6 ticks of heat.
It is noon, though. I mean, this is kind of
Like here, the market came in, right? Sellers almost got above it, didn't quite. Longs puke went down. Sellers, not sellers, but some longs puked almost. Oh, through 24 was gone. Sellers, they get a little bit above it. Longs puke, can't go down. There's some underlying, I don't want to say underlying weakness, but there's been some weakness. You'll probably get this to pop because you got a seller and this, and it's come down so far. But you can't, again, hold on forever. Here's what you can't do. You can't play this here, still be long, and add to it here. Can't do it.
unless you want to lose money, then it's ideal.
Yeah, it's just going to get lucky. Here's what good trading is. Let's say you took a shot here, took a loser. even if you took another shot here, scratched it, took a shot here, and made money. That's trading. And I'm not saying everybody should be able to trade like that, but that if you're looking to play the bounce of any sell-off, and I don't even advocate doing that because you're going to find yourself getting chopped up a lot. But if you're looking just to fade every move or every sell-off, in this case, looking to be a buyer, you don't buy it, keep it, buy it, keep it, buy it, because that's adding to a loser. You trade it from that side, but your timing is going to be a lot better when you have qualification tools that have to do with big buyers and sellers and longs and shorts puking. I'm going to stop the recording for